All right. So, digital block. I can see you, MRD, Emmy, and Cartoonation. You guys are welcome. So we are about to start this live session today. Um, so today's price action section is going to be us looking at what has happened from a previous focus and a recent price action that the market has created. All right. So just before we start, we sent some signal last week and this week, and we want to look into how that played out and what is the future of what we're looking at as price scenario. Remember, at the end of this video or end of this session, we'll likely end up of creating our trading bias for the coming week while we anticipate price movement. And we're also going to look at the technical aspects on how we trade, how we arrive at um, our bias, the criteria that we look at too. Okay. So that being said, let's just talk about a few things that affect traders first before we can start this analysis. We're going to have small discussion before we can start analysis. Okay, so like I said before, that trading is not just about, okay, all I need is capital, capital, capital. You talk to a trader, he will say, I don't have capital, so I'm not trading. I don't have capital, so I'm not trading. When you eventually have capital, what will you now be trading when you're not trading, when you don't have capital? Because the essence of you trading, even with your demo account, is for you to be able to have an edge over the market before you plug in your real money, which is your real capital, and trade, right? So when I hear people say, I don't have money, like yesterday's signal, I dropped the signal. I was expecting at least go and place the trade on your demo. Stop complaining, stop talking. See whether you're making money or not. See how it's going to work or not. If after 1 month you're trading with us with your demo account and you can create consistency from that, then you can fund your live account and trade the same pattern, right? Trade the same instruction, trade the same signal, and make your money consistently. What you're not practicing, it's impossible for you to have mastering of. What you're not practicing, it's very, very impossible for you to have mastering of. Every day, whatever I'm doing, where I am, wherever I am, I'm always looking at the market. I will look at the price action. If I'm not too sure of the risks, I'll go and place that trade on my demo account. If I feel like I need to, this trade is high probability, I can trade it on my live account. There's no difference. And even if I trade both my live account, I still trade my demo account till today. I test other risk levels till today, other strategy. So when you say back test, sometimes you can back test other people's strategy, back test other people's signals, see the accuracy and level of prediction of that, and focus of that signal. So when you're not doing all of this, the day you fund your account, the day you fund your live account, you're going to trade nonsense. There are not two ways about it. You know why? Because you're going to be very impatient. I have somebody in our signal group. Recently, some people that our signal group was asking, so we're not dropping signal date every day, every day. We are not trading like that. We are trading like professional, because you have to allow the market to create a structure and give you A plus signal, A plus setup. You should know what you're trading. That is what I'm trying to say. Know exactly what you're trading and why you're trading what you're trading, so that you can filter noise. The market is 24 hours opening, 24 hours live. And if you're still trading this pay, trading that pay, trading this pay, trading that pay, without having an A plus sector for yourself, you're going to be making money today, losing money tomorrow. So the money you make today, you lose it tomorrow. Your money cannot even last for 1 week. Your profit that you make cannot even stay for 1 week, because you're all trading all that, noise in the market. So you allow price action to create form and give you direction. So fun enough, we are only personally trading just very few pays, which is Europe USD, GBP USD, and probably sometimes I would do Europe GBP. and sometimes I will do BTC. I barely do trade gold at the moment. There's a reason why I don't trade gold at the moment, because of the people that are trading in my community, the volatility that gold has. And I don't even send the BTC signal here because it's also very volatile. So the major pairs is okay, which is GBP, Euros, USD, Europe USD, and the other pair, the cross Europe GBP. It's not that big volatile. So that being said, when you practice, that is when you can have created a pattern. You understand how this thing works and how you can possibly, navigate through, see your mistakes, and then make money out of it. Now look at these charts, guys. This is the same analysis that we had either last week or last 2 weeks, if I don't make mistake. This is the same chart. I'm not drawing. I don't do charts after charts, except I'm doing lower time frame. So I purposely leave this so that you guys can see. Now, what was our discussion either last week or so, about this pay and this market? Yes, let me show you. I can't still remember how we end up here. So I was talking about the market theory, and I talk about the market cycle, the way I trade and the way I look at the markets. For example, I remember when I said that this zone is like a red zone. This particular zone is like a red zone. Why is it a red zone? If you go to higher time frame, you see that the market was trending downward. This is the market here. This was a very huge sell-off, a retracement, which this was the first impulsive leg, a correction, second impulsive leg, and here's supposed to be a correction to the downside. But what forms here, the internal price action here, did not indicate any more correction. Rather, it was giving us several patterns of reversal. And I told you that you can either trade continuation or reversal in the market. And one of the safest way to trade is actually the continuation. So if the trend breakouts, you want to trade the continuation of that trade, because reversal can sometimes fake out, right? So now, from here, I remember telling you guys that, okay, we broke this particular swing highs, and looking at the nature of the market will create higher highs and lower high or lower low, depending on whether it's a bullish market or the bearish market. And so if that scenario, if that nature is being broken, what people call break of market structure, that means that there's a change of character. The market doesn't follow the rules. And if it doesn't follow the rules, it simply means that it's giving you an indication that it's likely going to have a reversal or a turnaround. So here was supposed to be first impulsive correction, another impulsive. You can see a little bit of pullback and correction here, a sell-off here. So this is supposed to also be a very good, we have a small correction here, a sell-off here. But this entire phase become a consolidation phase. And a consolidation phase is also a very significant area where the market is telling you that this market is exhausted, or maybe it's trying to find a way to, either continue on the sell side or continue either continue or do a reversal pattern. So consolidation is a very significant indicator in the market. So you can see there was no price action. Everything was just trading within the range, within this particular range, until we have this breakout. And what did I say about volume? This breakout came in with a very good volume. So look at this, from here to here, just one price action from here to here, 4 hours candles. That shows you that the volume has directly gone into another area, which is the buy side. The buyers are stronger than the sellers at this point. So they created equal volume, and we have this top here where we had now created something like double top. And you understand, when the market gets to create a double top, this one, this high and this high became equal. Most definitely there's going to be reaction. So while this market breakouts, what is the possible way of reversal, like correction phase I'm talking about now, is the nearest high that is very significant, and which you can see, this is a very significant swing high. So you expect that to be the correction. And how do you expect this high to be a valid high, creating a new high? Because he has created more than 3 candles, 4 candles in opposite side. So this high now become a new high, which is valid, right? Because he did not just get here and reject. If he gets here and now rejects, that could have been a very serious indication on its own. But it came here and then solidified by creating multiple candles, showing that this high now is created a strong high. So that being said, this was our new impulsive move. So we cannot have impulsive correction, impulsive, and now we have correction phase. Do you get? And now after this correction phase, we're supposed to have a sell side. But since this turned to be a reversal, if you check very well, you'll see something like head and shoulder and all of that we don't hear. This turned to be a reversal pattern. So this become another impulsive. So there's a breakout or pattern separation. That is the language. So now this particular pattern is being separated from this price action. So this particular phase now has started a new market direction because there's a pattern separation from this other price action based on this breakout with this impulsive move. So after impulsive move, what we expect next is going to be correction. I remember drawing these 2 lines here. With these 2 indicators here, like, okay, where is the nearest significant low? That was before we created this low. The price is going to come to this low. Let me check 1 hour. Price was going to come to this low because this was the only low that was significant after reaching this high, like a correction phase. And this is our impulsive, and coming to this swing high, we should be able to create a retracement in form of correction to do what? To have a continuation to the upside. And that was when I drew this, that it can get here either way. You can take this low and come back here. And if we see impulsive movement, a strong leg candlestick, then we are going to buy anyway in this area. But unfortunate enough, we did not buy this market. We missed the trade because we took a sell here. At the first price movement, it came here and it did not take this low. But we took a very short term. And I remember sending the signal and I said, this sell is going to be a short term, right? Because I was still seeing this place not being taken out yet. So after we took out the sell, waiting to see strong momentum to buy this, we actually missed to engage because the market moved without us. I didn't want to also send signal to trade from this area, because this way I saw it, But what happened now? This is another impulsive. So look at this: impulsive, correction, impulsive. What else do you expect? A corrective phase. And what is the nearest low or nearest support or resistance if you're doing support and resistance? This is the recent support and resistance area. And if you want to go back to where this other one, 4 hours, this other one bounce, right? You can see if you draw this line down, let me see that. It's also a very significant support and resistance area. Look at this. Previous level, previous support and resistance area. So what I'm expecting now as per the current price action is these markets to continue to buy. Is this market to continue to buy? Yes, some people will expect this market to come back to fill this area, maybe take out this low and come back to fill this area. But then I will expect it to continue to buy on the confirmation that if it gives a good momentum, if it gives a very good momentum, I would likely want to engage in buy. So I would likely give me a sign to buy than to sell more. But nevertheless, the price action on a lower time frame can give a short-term opportunity. So you have to understand the short-term opportunity for a sell-off and a longer term, which is the general market direction, which is the buy bias. Because if you look at the nature, it's totally bullish. Right now we are in a consolidation phase, which is the retracement and also which is the corrective phase of the market. So after the corrective phase, and you can see how corrective it is. If you want to learn about the pattern of correction, we have different price action for correction. Something like Stepley flag, large flag, and step flag, large flag, falcon flag, and small flag, and all of that, tight flag as well. So, however, once we see volume, I have other ways that we check out for volume, either way by looking at the XY or looking at the currency strength index to see and compare the volume. Once we have the volume set in, then we'll be comfortable to buy, right? So that's what I wanted to show you guys, that it's very simple when you understand the market bias and market direction. It's very simple for you to just wait, because you know that you're not waiting in vain. You're actually waiting for price to give you signal itself, price to show you that this is where I want to go. After you've analyzed and understand where the volume is, where the impulsive leg is, where the corrective phase is, so understand the phase you are in the market. Like when we were trading here, I would possibly know that, okay, this was the corrective phase, I'm in the positive phase of the market. So this market is like, and in the positive phase of the market is where you have those market makers trade, because the market has to create a very large candles, create very wide candles, and all of that. So that is the move you want to trade. You don't want to trade all this corrective phase, because when you trade it, it's going to sell, it's going to buy back, it's going to sell, it's going to buy back. So you want to trade the impulsive phase of the market, not the correction. The correction might likely take you out, maybe because you cannot really tell where the recent high is going to be created, or where the recent low is going to be created. So you allow it to create the recent high and the recent low for you before you now start looking for the impulsive phase. So another tool that is very important to use is the Fibonacci tools. Let me see something. Let me show you guys something. I don't know how many of you use the Fibonacci tools, but let me delete some of these. So let me see how bold this is. Okay, so you can see now, if you're looking at these Fibonacci tools, this is the recent low, and this is the recent high. Why this is the recent low and valid one is because of it has created more than 1, 2, 3 candles, and this one too has created more than 1, 2, 3 candles. So this is like 4 hours. And if you look at 4 hours, consider this as the impulsive leg, right? And this impulsive leg is supposed to target this high here. But you see, it did not get to the high. That means it has a little bit of void where price has to fill up, probably to have target maybe liquidity and all of that. Or yeah. So now, but he has created this high here and still leaving this small void here. It means that now he has created this corrective phase. Where is it going to? This corrective phase have gotten to 50% and almost, and has also gotten to like 61, 62 Fibonacci retracement. What that means is this is a very valid place for you to place a buy and give room for SL to stay aware of this low. I know you guys were asking about why my XL is wider yesterday. Is it yesterday or so? Now you don't want to trade. I don't trade an allowed price to use my SL and do giveaway. What I'm saying so is where you place your SL really matters. There's no how you place your SL within the market structure that you're not going to be taken out. It's not valid for you. It's not valid for you. Now, why have a wider SL? Because I'm intending to have more than one position. So I have first entry, second entry, and third entry price. So, but I make sure that my first entry is at the most valid point, whereby before we have a second entry price, it's gonna be still within the market structure. So if you place your SL within this low here, or maybe this low here, it's possible that this market is gonna sell down here and take out this low and do what? And keep going higher. So you have to stay out of this structure. So if I'm going to place this trade, this is exactly where my SL will be. I'm going to have my SL to be around here. Around here. I'm giving this low a gap, a space. Nothing concern this low. Right? Because this can still sell structurally and come here, reject this low, and start buying up. So I don't want to do tight SL. You do tight SL. When you do tight SL and you have tight SL 10 pips, 25 pips, and then the SL is being taken out, and you now find another trade, I still trade that same tight SL. The SL still being taken out. The problem is you're not giving price the room to react. There's no room for price to show you if it's going to move or not. So you're just tightening up yourself, your neck, and price will keep taking out that SL. So you give price action in the room, looking at the fact that your directional bias is bullish. And whatever happens within this price action could possibly just be price trying to just clear lows, take liquidity, form another structure or gather momentum to be able to push higher. So guys, that is basically how I'm looking at this market. This look good to have, sell continuation, but then it's not for me. I'm not really much looking to that sell, because generally we are in a corrective phase right now, and so what I'm expecting is that the market will continue to buy higher, right? So whatever happens here is a short-term sell. And if you look at GBP USD, there's a reason why I even gave that GBP USD signal yesterday first, because one of them is that GBP was lower. So if you check GBP sold more than Europe USD. That's because GBP was very, very low in strength than Europe USD. So like today now, the most paid that will be very much valuable to buy will be that Europe USD, because I will have to check for this GBP USD if it has a good strength today. Now look at how much this sold. So we sold here. We sold around here. We sold Europe USD right here. So it was crazy to some people, like, okay, why are these guys selling this market here? The market sold from top. This is where we took that sell. The market sold from here and to here. Everybody said it's going to be a bounce back. It's going to be a snipe to buy up. I understand that the market sentiment is all bullish, but if you think like everyone else is thinking, that's when they said that 1% of traders that are profitable think quite differently. You have to think differently based on your strategy. So it was very crazy to sell GBP USD here, especially when we had already had oversold. So it would have really make sense if we said we sold at the top. But I saw that GBP USD had even clear void. Look at where it bounced. He had a very clear void. If you don't understand what is void, you can go and check. Maybe you can see one or two content that they will talk about void. Has a very clear void in the market, all of this. And then the momentum that he uses, because you cannot have impulsive correction, impulsive, and have impulsive again. So if this price action was to be corrective, like slow, creating patterns, creating step flag, bearish, bullish flag, and all of that, large flag structure, it could have made sense. But you see the volume that it uses, almost an equal volume to come down. That shows the weakness of GBP. So if you use that kind of volume to come down, that means he has more strength to go down possible than any other thing. And this is where we took a profit. If you want to look at this, your left hand side, you'll see there were structures there. Previous previous high, turning resistance, turning support. Yeah, previous resistance, turning support, and all of that. So it was obvious to come here. Then also this will be a very good price action way to buy this market. Let me check on something. Let me pull out FIP and check check this high. Okay, so this also is going to be a very good place to buy. I would love to buy GBP USD today, maybe again this week. But what I want to see is I want to see that impulsive move, at least a very strong candle momentum coming in. Then I would like to buy it. But then I also look at the market strength and to see between GBP and USD which one has the most potential to move than the other one. The both gonna go in buys, right? But then strength really matters. If you just want to you don't want to stay for long in the markets. Now, another thing I want to show you guys on this 1 hour time frame is the same thing I talk about: market structure, market theory, continuation, and reversal. Now look at this. Here we had created this high on 1 hour, and we had a low here. So this was supposed to be like a bullish flag from this impulsive leg, but this low was taken up very impulsively. Look at this 1 hour candle. Now, what happened after this 1 hour candle closes and taken up? It created a bearish flag. So this market has given us a bearish sign since to have sold. This was on a lower time frame. This was a very clear bearish flag. An impulsive correction. Impulsive, another correction where this could have been an entry. Impulsive. So this is where I sold. So when I saw that this has given us all the structure we needed that for a sell continuation. Remember, either we're trading reversal or we're trading sell continuation. So these had given us first impulsive. It's sold. Give another one. Give a correction, which is like a retracement, and also sold off. So this one was forming like a large flag. So I expected that it's going to continue rather than wanting to stand here and try to buy the market because it has taken this low and all of that. I sold because I've seen the pattern that this has a very strong. Look at the good legs of impulsive correction, good leg impulsive correction, and there was a very huge void around the market here. All of this, nothing was there. It was empty. Combined with the strengths, right? So this was the pattern I saw, the bearish flag right here that gave that signals to sell off. So that was what I saw personally. And I would have taken, this is also a very impulsive leg, and this is more like a correction flag, but this is forming something different. So we're waiting for the pattern to complete. It can likely buy back here and create a larger flag for a sell continuation. But then, because of the general bias that we look at on higher time frame, it should give us a sign, maybe a pin bar or a bullish candle, NCOV, whatever it is, for us to buy back to this high and buy back to maybe all of this price action. So guys, I don't want to waste much time, and that is what I'm looking at the price action. What's going to happen is once we have confirmations to trade, we will send signal for the community to trade alongside with. So that's what I should say. You can backtest this strategy and just try to understand the market trend. Trend is your friend. So if the market is selling, you don't want to start forcing the markets to buy. You want to wait till it gives you a signal to buy. Basically, that is the price action for today, and grateful for you guys being available. And to those that are not here on this live session, will also have the opportunity to have the recordings on our YouTube afterwards. So if you have questions, I would like to answer your question, please. Magic, and if you have question pertaining to what I just explained now.
Yeah, boss, thank you so much for having us.
Okay.
Yes,
You're welcome.
Yes, sir. It's about the time frame, sir.
Okay.
this time frame, is it that it is when you are going to look or study the market that you'll be checking the time frame, or you can also be setting your trade whenever you want to place a trade by going back to the time frame and look at
No,
the
what time frame does for you is to give you market insight. Time frame is showing you some of the price action you're not seeing on higher time frame. Maybe some of the structure, you know, like this GBP USD. This structure you're seeing here is not visible on 1 hour. 1 hour, sorry, it's not visible on 4 hours. 4 hours is giving you straight up impulsive legs, candles, just a little bit of retracement candle, but you did not see what was formed. Was it a bearish flag? Was it something significant that now look at this? But here you can clearly see on 1 hour time frame that this took time to give you a bearish flag. This took time to give you a bearish flag. This took time to give you a large flag before the sell, right? So the purpose of time frame for you to be able to look at the markets clearly and to see the structure or price pattern that you are trading, right? It doesn't matter if you afterwards that trade is going to be swing or it's going to be scalping or it's going to be something you hold for 1 week or 2 weeks, so it does not expire, right? The only people that use time frame, the people that use time frame and to trade, like the trading based on time frame is those that are trading option market. So they will stay on one candle, one minute candle, 2 minute, 3, 5 minutes candlesticks, and they trade the time frame there. So they have a timer where they're trading and open and closing of candles and all of that, just to make it's a different.
Okay, boss. Sir?
Yeah, go ahead.
So now if I am to place a trade, or if I am placing a trade now, time frame doesn't matter on it, right?
Yeah, it doesn't matter on it.
Okay.
It only matters when because you want to see, you want to be able to see the price action.
Okay. Okay, sir. Thank you, sir.
You are welcome.
Sir, one more question, sir.
All right.
Like that yesterday signal that you brought, does it was it, I don't know how I'll put it, like from the time you drop the signal till the time that you close the trade, sir, is the market going to close by itself, or you must have closed the trade before the market will close the?
Okay, so I think I close in the afternoon when price moves. So basically, you cannot predict when you open. You cannot predict when you really open your trade or close your trade. It depends on price movement. So you can have maybe pending orders or you're in the market instant orders. The price has to move your direction significantly. Maybe you reach your take profit or your target area, first or second target area. You can manually close them, or you can, if you had used TP or SL, it will be closed by itself. But then when you see price has gone into your value area and giving you the kind of money that you expected, you should be able to manually close them. That's what it is.
Okay, because I really enjoy your signals. You hardly send signal with take profit, sir. I don't know if there's one magic for that.
Why I send signal without take profit is I'm watching the market. So, and I'm basically trade price action. So I have marginary take profit. There's something we call marginary take profit. Even with SL, marginary XL, marginary take profit. So I have a take profit price in mind, and I want to see price react. So instead of conflicting where I would like to take profit, I want to see price give me signal that it's rejecting here. It's gonna, because I don't really like making money and then I'm giving it back to the market. So when you put targets your TP, Yeah, sometimes you want to wait till you get your TP, but once I see significant price movement, I can decide to break even and hold that market. But I have a marginary take profit price. But I want to see how market will react. Then I can decide to either take profit or hold it. But you can see that I'm always giving the instruction to either hold or take profit or break even. That shows you that I'm trading the same trade. So I'm not giving you signal and I go and sleep, right?
Yes,
So
sir.
that's just the way it is.
So, sir, like that, stop loss, sir. After you have already placed your trade now, can you be able to go back to the trade and change the SL? Or once you
Then
have placed it, then there is no change?
you can modify your SL and TP. You
Okay.
can modify. Yeah.
Thank you very much, sir.
All right. So that will be all for now. If anyone else have a question, I will take. Otherwise, we will have to end the live session. So we started by 10 and it's supposed to last by 1 hour. So we're already 1 hour right now. Other price action and every other discussion will continue on our group. So do well to participate. And again, we might have one lucky persons to get sponsored this week or next, depending on if you meet up the criteria of what we're looking at for as the community member. So thank you guys for joining, and we'll see you some other time.
Yeah, boss.